Good evening, everyone. This video is going to be a trading review and support session for July the 13th, 2022. So we'll go through the trades that I made today and what was going on. We'll circle back and do some of the kind of the high probability kind of setups. And so, but first, let's kind of go through, uh, just go through let's go ahead and go through to the daily chart. So this is today. It was a little bit on the wild side when we opened up. The market was about here, right? Well, not when we opened, sorry, but when the market reopened, and so just but there was the consumer price index data was released at 5:30, and it was wild, and it's kind of a surprise. The consumer price index came in pretty strong, which means inflation is higher than even forecast. And it's starting to really kind of lock in at least a 75% basis point interest rate hike this month. After the day, I was kind of reading a little bit, and there is a not insignificant chance of a 40 something percent chance that they're going to adjust the interest rate by 100 basis points, which is exactly what Canada did today. Now Canada's not a huge economy, but and a 100 basis point move is historically a very big move, but we are historically at very high inflation rates as well. Maybe it's warranted. We shall see. So anyway, so very wild ride. So you can see that news was released at 5:30. All right, so this vertical line is going to be trying to be as close as it can from 5:30. Right, and so I mean, look at that drop from this area, the 3871, very quickly, came down like 80 points, right, within, I mean, literally seconds. Um, I actually woke up early this morning, couldn't go back to sleep, so I decided to go ahead and get up. And so I had the computers turned on and that kind of stuff. And I say, oh, well, the CPI data is about to be released. And it was super crazy. Um, I did not try to trade this section at all. I mean, the dome was literally pretty crazy. So didn't want to hit the button in that. Dome was so light that if it hit a stop, I mean, you're likely to maybe have even gotten a pretty bad slippage. But I did trade, through here, and ended up a few points before the day started. So I started out ahead, and I didn't need to trade that much more to get a reasonable profit. So let's kind of go through that. And so let me make sure I can draw as we go. So this first trade, right? It looked like it wanted to come back down some. I mean, I didn't. Here's the trade. I didn't enter into here, and it was it worked and it worked very quickly. I think I was a little bit late on it. I was trying to wait till 6:33 cleared to make sure it didn't want to bounce in any of those areas. So it was a little bit late. And in the first couple of trades, since it was kind of a strange environment with the consumer price index. You never know what the market's going to do. So better entries, a little bit earlier entries would have probably worked. This one I'm okay with the timing with. There's a trade here, right? And I'm really looking for this relationship between the flexes, right, and running away from the flexes. Now he had already made kind of a dip. It wasn't going sideways in this area, but this is very early in the day. So this is the second trade, and that one was also quick as well. It was running through. Though this one, was kind of going into the 25%, lower line and VWAP. So I was a little bit more cautious on that one, but it did not look like it wanted to pull back. So I actually got into the trade about there, and so that one was pretty quick as well. So I'm up, fairly decent by now. so I'm not in a rush to trade. So I'm trying to pick out some relatively good things, and I'm really looking for those flex alignment as best I can, not running into a bunch of junk. So I think there certainly is at least a few more trades here that I wish I could do something with these arrows to make them significantly bigger, but it just doesn't work that way. Um, okay. Oh yeah, I remember not intentionally not wanting to trade before 7 to see what 7 o'clock was going to do. All right, so here's the next trade, and again, maybe I didn't want to take the trade. I mean, here's the good alignment, right? Here's the good alignment with Ultraflex and Fastflex breaking down from the 3 minute moving average and the EMA, but it was in the fast zone. So I was a little concerned about that. Once I look at these trades for a longer period, maybe I'll get a little bit more brave. But as you guys know, I hate the fast zone. So I got in the trade, here as it was breaking down. And, I'll show you my brackets again just to make sure it's on video. But I'm using the 3 point trailing stop. It survived nicely and came back down. So that trade was positive as well. And looking for the next arrow. Maybe I should put double arrows. One where I took the trade and one just to earmark the bar so I can find them a little bit easier. Yeah, I'm not obviously not in a hurry. I mean, there was pretty good separation. I mean, they're pretty close here again, right? And so, so there's probably a trade there, but I didn't need to take it, and I'm looking for something just a little bit better. And okay, so there's my last trade. Okay, so here it is, and it was coming from, here's this area right again where the flexes are fairly tight and a big bar up. I made sure it wasn't going, trying to make sure it wasn't going to pull back again over VWAP. Today was a higher volume day, so there is some extension, right? So if there's not a higher volume day, you probably want to get in a little bit earlier. So this is my last trade of the morning, and I got in, after that bar, and it was also a very quick fill. All right, so while I'm thinking about it, let's and so I don't forget, let me just get this on video just in case anybody's watching it. So this is my master strategy settings, right? Going for 6 ticks of profit with 12 ticks of stop, which is 3 points, right? And the trailing stop kicks in after 2 ticks. It is also 3 points. So tightening down on the trailing stop, which I had before, was a little bit too tight, and also trying the 2 point stop itself was also too tight. So if you're in kind of the right direction and you're not extremely late, this worked pretty well. And my results yesterday would have even been better if I was using this. But you gotta, for me anyway, you kind of gotta trade it a little bit to see how it's working. And right now this is working pretty good. I don't want it to be any looser than that, and also don't right now, and I don't want it to be any tighter. So I think it's pretty good. So let's go back to the beginning, and I'll try to earmark these higher probability areas, focusing kind of on the flexes again. And we had an area in here, right? And I took this one, so this is a pretty good probability. With it coming away from the 3 minute close, the EMA, the flexes are right there. The important flexes are there, so that is one. Right, here's one that I took late. Right, so here's kind of the alignment. It had come back down and tested the EMA. Right, it even tested the 3 minute close, and it popped up. Right, and the flex alignment is pretty good. I took it late because I was a little concerned about this, right? Because it was kind of stopping right here for a moment, right at the probably the 3 minute high right here in the EMA zone, right? Coming from this high over here, right? So when it popped, right? So was it fast enough on reflexes to do that? Once it got to this point and it popped a little bit over the 25% lower line, I needed to make sure it had a little bit more oomph left. And it's really early in the morning, so many times it does have some oomph left. And if it did, it had plenty of room to go higher before it hit S1 and the 5 minute moving average. So I did get it after I gave it, like 10 seconds to make sure it wasn't going to have any selling. And so that was a pretty quick trade too. Going to see if I can find any other. And I mean, the market was moving, right? I don't mark things that could work, but a little bit more volatile. I'm trying to be a little bit more cautious, especially since I was already protecting profits at this point. I mean, for instance, well, that's just going into the EMA. I'm going to try not to get into too much trouble with that, even though the market was moving quite a bit today. All right, so this is a zone, and I took this one. Again, the alignment is pretty good. Here's the 3 minute close. Here's the EMA stepping down, and even the next 3 minute close. And fast flex is here, and ultra flex is here. Now, the medium term one, right, is a little bit faster. It's up in here, right? So I'm not sure how much that one adds value. I may delete that one from my chart and see how I like it. I'm mostly depending on the 34 and the 100 setting. Right, so and so this one is coming down. So really anywhere in here that you feel comfortable. I didn't take it until it kind of broke the 2 by 20, right? So you can see it breaks there. Now when it breaks that, it does pull back and resume the trend, right? But again, that 3 points trailing stop is saving me. It only pulled back about 2 points. Does it? And it pulled back to the 2 by 20, right? So it's the downtrend held and the trend continued and it turned into a good trade. If you're super patient, because it had traveled, let me just make this observation. It had traveled, right, from this pivot quite a bit, right? So after it breaks that last one, it's reasonable to think it might pull back if you can hold off a little bit on pulling the trigger, right? Let it pull back and maybe on the first or the second down bar, as long as it doesn't go too fast, right? At least it will produce a faster trade, right? And you won't have nearly as much pullback and a lower risk. It's just up to your level of aggression. Let's see. I'm looking for the blue boxes. Right, here's another one breaking down, back down out of the fast zone, right? Here's the 3 minute close. The EMA is right there. This is a little bit wider, right? So the closest it got is the ultra flex is here, fast flex is here, but it's already kind of on a downtrend. So I think that one is pretty good. Didn't take it, probably didn't think I needed it, and I really didn't. Taking the pullbacks and the resumptions in anywhere in here, if you're going to be aggressive, is okay. Just know that you're being aggressive, and that's it. It hasn't bounced too high just yet. Just know that you're being a little aggressive. Wait for a pullback into the flex zone and then a resumption, right? You can do that on when this thing gets pretty trendy. Just know that it's a little bit more aggressive. You're counting on continuations more than that initial burst. And let's see, I'm looking for more blue boxes. And so here's the one I took, but again, I took it a little bit late. Already kind of discussed it, right? The flexes are right on each other. EMA is right here. The 3 minute close is right here. 3 minute moving average doesn't bother me too much, right? But when it pops all the way through it very quickly, and through the volume, not the volume point of control, but VWAP, right? So I had to wait just a little bit because sometimes when it breaks these levels, it has a tendency to pull back down, right? So I gave it another couple of bars and then got into it before it had this next big bar. I mean, ultimately, anywhere an entry anywhere in this time frame would have worked, right? You just want to time it as best you can. Even this one, right? So we're kind of in a little bit of a trading range. Here's the top of the trading range here, right? This the horizontal line here, right? And it is breaking out. So here's the again here's the EMA. There's the 3 minute close. There are the flexes. They're right there together. Getting some buying, more buying here, right? So this would have been reasonable. Let's see, but I didn't need too many trades here, so that was pushing it a little bit for me since I was trying to be a little bit conservative. But that's a good alignment. And I'm still looking for blue boxes. I know there's more because there's even here's another one. And let's see, I had definitely stopped trading by this point, right? It's after 8 o'clock. Um, where's my last trade at? Just to go back. Yep. See, I stopped trading it by 7:30, which happens many times. Let's see. So it's after 8 o'clock, and we get good alignment again. 3 minute close, EMA. The flexes are pretty close, right? Pretty close. They're hugging each other, and the market is going up. Expansion here again over the 2 by 200. You can wait a couple of bars just to make sure it's going to end up breaking out, but then boom, off it goes. And I think there's at least one more that is done in the that not it's not in the fast zone. I mean, you could say here, but right, you're trading into the fast zone, and we're trying to avoid being too aggressive. But here's a good looking one. I mean, I think we were talking in experimenting with Zoom at this point. So there's the 3 minute close. Here's the EMA right here. Flexes are really close together. A 3x Renko down and it's breaking down, right? So that would have been a great trade. So even though I finished the day up 10 and a half, like I said earlier today, could have been in the teens, but don't want to push it. And I don't think I think that last one. Oh no, I did mark another one. Again, pulled up to the fast zone, right? There's the 3 minute close. There's the EMA. Flexes are right there, right? And got an expansion, and down it comes. And I'm pretty sure that's the last one I marked because actually we're after 8:30. But that's those are the ones that we are looking for, right? These type of alignments that are breaking down. This is a high volume bar, so you would have been able to hopefully see that. All right, so fairly easy trading today. I was much more relaxed and waiting for the best signals instead of pushing and jumping around. So, any questions on that? So, question is: did you come out of not defending anymore or reversing anymore because maybe the new volatile market environment and continue well trailing stop, which makes sense to me. I stopped. Okay, it's really risk management is what it is. Um, so defending and reversing um, leaves you open to a mistake, right? So defending and to defend, you need a bigger stop, and to reverse, you also need kind of like a bigger stop. So both of those, by definition, mean that the trade has kind of gone against you some, right? And so, most of those times I come out of those trades just fine, even adding to it, meaning defending and or reversing and adding to it, right? Most of the time. Um, but there are times when I'm too stubborn, right? I reverse too late. of which at that particular point you can hurt yourself a little bit from a profitability standpoint, right? So having tighter stops, and it's not a make it or break it, right? And so 3 point stop, I've kind of dialed that in, and the trailing stop helps some, right? In that if it goes in your direction some, but not all the way, it is going to reduce your stop out amount, right? And if it goes against your 3 points, okay, we just have to say from its lowest point, wherever it went, either from your entry for the lowest point that you went, if it reverses 3 points, okay, then it turned out not to be a great entry. No more decision is involved. It just turned out not to be a great entry. And so you move on with like a maximum of a 3 point loss, sometimes less, right? And so it's just about, so you can make a couple of mistakes during the day, and yeah, it won't be fun, but even a couple of mistakes is manageable, right? So and you can make a bunch of mistakes and still in a day and still not be as bad as you know, be much better off than even one bad day, right? Because one bad day can suck up a lot of previous profits. So it's really risk management, right? So just deciding to settle in on a more conservative risk management position, and I don't think it's going to hurt profitability. And in fact, one I haven't done it yet, right? But one of the things that this allows, I mean, we're only risking 3 points, right? And some trades, even that do stop out, are going to be less than 3 points. So we don't have to necessarily reserve, the amount of account value to add to it, and or to reverse, and or to fight it. Those things are gone, right? So then we can get, if we get pretty high, um, I mean, today I had no losing trades in the daytime session. So if we get pretty good at not daring ourselves to take some trades that aren't really kind of working for us, and on slow days, right, maybe we really, trade less, right, looking for a couple of trades. But I'm working towards maybe using a higher number of units, but keeping the tighter stop, right? So and I haven't done that yet. I need to practice a little bit more before I start to bring a little bit higher account leverage, because I'm only risking 3 points, right? I don't have to reserve the account um, to fight it, to let it go against me. I mean, so that's I hope I have broken that habit forever. I don't see why I won't. So I'll just try to keep dialing in entries more and controlling my finger more. And once I do that, then I can probably achieve more consistent profitability month to month, even with this technique, by not ever having to sweat it too much, and using a little bit more account leverage. When I do use a little bit more account leverage, I'll probably get out, depending if the number of units that I'm using is odd or even, for instance. We'll see. But my first exit, right, to book a little bit of profit, maybe before six ticks, and my last exit may be at six. I don't know, depending on how many units if I'm at an odd or even, if I do the division, right, on the master strategy, on the number of exits to the levels. And so, 1 point is pretty conservative, right, if you're taking any reasonable, entries, right? So at that point, you booked a 1 point profit, right, and your stop has lowered itself to probably about two, right? If it cleared four, then it probably moved the stop to essentially a -2. So then at that point, you're only risking you book 1 point, your stop is at -2. So if it stopped out from that point, then oh no, 1 point it would be, yeah, you'd have lost 1 point, right? If you booked 1 point, then it went 3 points in the opposite direction. That'd be -2. So the net result would be -1, right? So that's kind of what I'm looking at. Not yet there yet. Maybe next week, maybe the week after. Kind of see how the market is doing. We are in summertime, like I was kind of mentioned this morning. So the markets do need to have some volume, right, to try to get more points, right? I mean, if the market doesn't have some volume in it, we really literally may only take, 2 or 3 trades, which is fine, right? Which is fine with the leverage that I'm talking about on a kind of a boring day, and then we'll save pushing it for days that have a little bit more volatility in it. So how many stop out of 10 trades make you break even? Well, it depends on what your stop out is, right? If if you're going for 1.5 points of profit, let's just use a simple example of a single unit trade, right? If you going for 1.5 point with a 3 point stop, right? If you make two positive trades, you've netted 3 points, right? And then if you have one 3 point stop out, then you're at break even. So one stop out to two profits, you're at break even, not counting commissions. Which is why it's kind of important, right, to not chase too much and certainly not chase on a slow day, right, and to wait for these flex alignments, right, in really good positions. And if it's really kind of, and I've done this, right? I have at times been a little bit speculative when the flexes are kind of aligned, but they're really not hitting the market too much, right? So we just have to, if they're really not hitting the market too much with volume, then we'll just have to pull back. And sometimes that happens, right, if it goes a little bit dead before 7 o'clock. But after 7, there's usually one or two trades after 7, if we really wait for the best ones. And sometimes there's another one after 8 o'clock. And then if we don't like our profit totals, there's usually like one more around or after 8:30. So even after 7 o'clock, if we need points, right, there's usually at least four more trades that are available that look really good. We just have to be patient. Did I answer your question? Okay. All right. Anything else? And when if you want to trade at some point on multiple units, right? If you book that 1 point profit, and you have another one a little bit more aggressive, right? Then that's already a much lower risk overall, right? I mean, yeah, if you had a 3 point stop on 2 units, for example, then yeah, that hurts a little bit. Not no more than one unit, if you're applying the same account leverage, right? But if you have multiple units, you're hedging a little bit more because you're going to get one out at one point ish, right? That's what I'm thinking right now, right? And so I'll experiment that when you do. But even though the risk might be slightly less because the one unit is only going for one point, I still think we want to take the same uh, the same best entries that we can. All right, that is going to be it for me then. All right, so hopefully we'll see you in the trading room tomorrow morning, and have a great rest of your evening.